The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Hi, folks. Finally got that right, that entrance. Yes, this is Basil Chapman sitting in for Dave White, and this is the Power Trading Hour. And Dave is not here, so I'm sitting in to help him out. My pleasure to be here. And I'm part of the TFNN team, if you have not heard me before. I have a service called the Opening Call. It's a very intense look at the markets every single day. It gives the short term, that's the near term, the short term, and the bigger picture overview every day. My overview and market today section. I show the Dow charts. I show all the different indexes that are very important every day. I give parameters, and I have my traders corner where we have positions and how we handle the positions, how we raise or lower the stops or buy stops. So, and I'm here Monday, Wednesday, Friday, 11 o'clock till noon Eastern time, and with the Tiger Technicians Hour. Now, we're going to go straight to the market because this is, for me, a very important day. In the analysis that I do based on the techniques that I use, which goes under the umbrella of the Chapman wave, there is a certain number in a buy mode, a certain number of consolidation days. I usually use 1, 3, 6 as numbers that are very important. That implies to me that although the Dow is weaker than the S&P today, and that's partly because of UTX and Caterpillar, it makes no difference. The Dow needs to clear the previous high, and that was the high of just 3 days ago. I was at 4 days ago. 4 days ago, 13,289, and it needs to clear that within 6 days. That means today's the third day, 4, 5, by Monday. In fact, to continue the power of this buy mode, it should do it no later than Friday. And it should just do it decisively by going to 13,330s and higher. It's not a big deal when you consider what's been going on in the market. If it becomes a big deal, that is an issue. So let's go through all the numbers. The Dow is up, Dow's down 12 at 13,157. Earlier in this morning's show, I was expecting that there was a chance that we had seen the low for the day and that we would just creep higher. And my preference, if there was such a thing as a preference in the market, was to see the Dow close somewhere in the 13,170s. Best case, it would be 13,190s. Hey, day is young, anything can happen. Let's see how things unfold as we go into that 4 o'clock hour. Now, what's important to me also is that the S&P, which has been acting quite a bit better actually than the Dow in this pullback. In fact, the S&P went to a peak B. That's if you're looking at the Tiger TV, you'll be able to see. I'll open up the chart. I'll tell you what I'll do right now. I'm going to open up the chart so that you can see this much clearer. And what you will see is, I need to put an up arrow there, that in the S&P index at 1340.23, that was on the 6th of March. I believe that was the 6th. Yep. We started a single leg A to 1374.76, a little bit of a pullback. See that doji? Very important in my work because it could be a measure of a one-to-one upside relationship, and that's exactly what we got. We got right to the next doji, then continued and went to a peak B at 1414 on the 19th of March. We pulled back. So far, this is another inside day, just like that leg A was. But we have to wait for the close. We have to wait. Whatever bar you are looking at, whatever you're trading, if you're trading a 1 minute bar, I happen to trade 1 minute and 3 minute and 5 minute bars. If you're looking at those, you must have the patience to wait for the bar to finish. Anything can happen to the split second that next bar comes. It's not fair to be talking about a daily bar and then start making decisions, excuse me, unless the unless the bar is so clear to make a decision before. Left froggy just jumped into my throaty. Unless you wait until 4 o'clock in this particular instance. So far, excellent action. The weekly chart is in leg C. If this week there's a higher high above 14.00, it continues this leg C to the upside in the weekly. That means you can't get a peak C until the following week, the Friday of the following week. And the monthly chart has gone to a new leg E. Now, I'm going to just go through a couple of things here. I'm going to make this a high-tech, David is our guru here at TFNN. He comes up with the stuff that it wasn't even in your wildest imagination, and it's just beautiful. And he anticipates moves in the cyclicality of the industries within the text, etc. Fabulous. And of course, he's got his power vector indicator. So it's really an honor for me to be in this position right now. So let's look at the Qs, because the Qs has a heavy weighting in high tech and certainly Apple. Now, if you're looking at the Qs, you've just extended leg C. This is really positive. The stochastic and the MACD, two technical tools I use, are really strong, and it's way above 66.44, which is the 9-period exponential moving average, and it's at 67.46 right now. It's 1 point above, and it's a very extended leg E. I mean extended. I don't mean overextended. I mean it's extending in leg E in a single move that's gone from. Look at the beauty of this 9-period exponential moving average from the 23rd of December, week of the 23rd of December, 23rd of December of 2011 at 56.08. Once the 9-period moving average was overcome, you've seen nothing but upside moves without even touching that white line, the 9-period exponential moving average. And look at this monthly chart. It's going to the upper resistance area. It's a moving target because it moves every month. 68.77-ish area is where there'd be strong resistance in the, got to get rid of that, in the monthly chart based on the history of this chart from the low of March of 2009. And we're at 67.44. Can it go higher? Oh, absolutely it can. That's just a trend line. It does not know the trend line is there, but it's so fascinating how it has been repelled from that trend line. So I'm going to go through some other things right now. I put in some requests. I said in the den, put in your requests for the high-tech sector, and we'll get to them since it's a tribute to Dave in this hour. So let's go. The first one was WT Deuce wanted CPST. Now, that isn't a high-tech per se, but certainly they use high-tech. It's called capstone turbine. Now, if you're new to my work, let me make it really simple. From the most identifiable low bar, that's the whole bar itself. It's a little tippy at the bottom. That's where you can start counting the peaks in the Chapman wave. So what we have right now in capstone, CPST at $1.10, it's unchanged right now. It went to 0.98 on the 6th of March. Then it went to peak A at 109 on the 12th, pulled back with a doji. It's gone up to making another doji today with a high of 1.12. And the MACD and stochastic are improving, but they're not great. Now, in the weekly chart, you've had a spectacular sudden move, and this is the kind of thing that it does. Oh, I never finished all my notations. So this is going to be A, B, C, D, and then it goes E, F, and that's G. And the reason why I continue the alphabet letters to G is because the MACD fast-moving average just kept going higher. There weren't any little blips or little pullbacks to start a brand new move. So in that context, I'm going to call that a G, and it's pulled back all the way. Now, where it is at this particular point makes the low of 98 cents on the week of the 9th of March really important, because if it closes underneath there, there's no question that you got to anticipate it could go all the way back to 0.86, the low of the 25th of November. So now the question is, what do you do with it now? The monthly chart is just, I don't even want to talk about it. It's horrible. This is a stock that was once 98 or something. What was it? 100 and could have been anything. 98.50. 98.50, get down to 0.82 or something. I mean, it's pathetic. You haven't seen some of these stocks really take a beating. However, as it stands right now, this is very nice action. If you are long, I would probably say I'd put a stop in part of the position at 1.07, but since it's a low price stock, it could move there real quickly. So let it trade there a little bit and then touch 106, and then I say, okay, I don't want to be part of this. I'm going to get at least some of my money out. But I can tell you this, if it can close, not go, it has to close in the it's 110 now. 113 to 113. Yeah, the 113 to 115 area, if it can get there, that will be absolutely fabulous action. Why? Because all of a sudden, 120, the 200-period exponential moving average, will become the target. So that's that. That's Capstone CPST. Next question I had was, X-Roads wanted to know SMHs. He wanted the stocks, SMX. I'm going to go to the SMHs just for now. SMHs, just like many of the stocks that I'm looking at, broke above the previous high. That was the high in this case of the 17th of February at 35.49. This is the Market Vector Semiconductor ETF. And it's trading right now 35.69, up 27 cents. MACD and stochastic, these two technical indicators that I use are really strong. It's got a leg C. I anticipate at least a leg D. So it'll make a peak C in the next day or two, and then I expect at least one more leg, at least I say. But I think it could even go higher. So what price would I take as a target to the upside? Well, based on the, let me see, D, A, B, C, D. Based on the 120-minute chart and the daily chart, I would have to say that 35.90 to 36.10 is probably the area that I'd watch really closely. If it can get there, the SMHs, together with the restaurant group, Apple, and another couple of aspects in the market, are going to be absolutely critical. I'm including T-bonds, the TBT, if it makes its leg D coming up very soon. That's the inverse of T-bonds. That's the 200% short, the TLT. Now, this is also very important. And the volatility index. I don't know if I'm going to be able to get that now. I want to get to these stocks that I was asked about. Now, in the SMHs, major support at 35.14, the 9-period exponential moving average. That's not the issue. The issue is that 34.39, the 9-period moving average of the weekly chart, which is still very strong, that's going to be key, and I'll explain why. If the SMHs, that's the S&P Select Semiconductor Index, let me just move this over here, right there, which includes Intel, Texas Instruments, Applied Materials, ADI, Advanced, ADI, why am I forgetting that? ADI, Altera, Xilinx, and Broadcom, and many others. That index itself tells us a great story, because this is leg B up in the weekly in the monthly chart. I'll be back. Basil Chapman sitting in for Dave White. 877-927-6648. I still will take calls.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Minis. This is the E-mini S&P 500 June futures. And you can see what it's done, exactly what I was discussing, how the waveform goes to buy modes. And it should go to at least a peak D, and then you can get your pullback. Well, we went from the low of trough D at the E-mini at 11:05 this morning, at 13.94. Actually, while I was doing my show, I had shown this, and it went peak A, B, C, D, and then E, right at the 200-period exponential moving average resistance at, let's see, that was 1401.00. Then it pulled back. And this is how I like to use Fibonacci every once in a while. I don't use it all the time, just when I think it's clear. It was a right shoulder failure pattern right there. So I did my Fibonacci extension, which went to 1397.58. Of course, S&P futures only trade in 25 cents increments. It went down to 1397.50. And then started another buy mode, and that's gone to a peak D again. This time the 200-period moving average at 1450. That should be support. I'm saying it should be. It doesn't have to be. I'm just saying that because it's broken out and treated the magnet and repellent line as a breakout to the other side, it's now looking at the other side. Now let's go back here. Very important question I want to know about, or someone wanted to know about Apple. Apple is in leg C. It's recycled to the upside in the daily. I've got it as leg F in the weekly, but it could be an alternate wave count, F/B. And in the monthly, it's recycled to leg D. It's it's looking really powerful. But don't think that stocks can't pull back. I suspect that within, what is today, Wednesday, I suspect that within 5 to 6 or even 7 trading days, Apple will start quite a heavy pullback. Then it'll have a retracement back, probably fail to get to whatever the high is when it starts coming down, and then it is vulnerable to a move to probably fill the gap, and that gap will be at 568 to 594. But we go one step at a time. We don't know where the peak D is or whether that's going to be the top. So until we get the signal that says, okay, short-term sell signal, we'll see whether that can increase into an intermediate term. But at some point, Apple will have a 40 to 50 point pullback. That's just the way things work. Now, the other question I had here, and I'm going to go to it, but I had an email asking about... Whoa, I got a bunch of callers online. I didn't even realize that. I'm sorry. So let me do this because I promised the emailer that I would look at this, and that is a Biomed, which is ABMD. I just want to do this quickly because I want you to show ABMD, and then we're going to go to our callers. A Biomed is in leg C up in the Chapman wave, made a peak D in the weekly. It's trading at 2307 up 77. I'm calling this G/brand new B in the monthly chart. Artificial hearts. Now, I also want to mention this, talking about hearts. Our dear friend here at TFNN, Ed Young, I spoke to him yesterday. He's just had a very major operation, a valve replacement. And I have to tell you, from the time I spoke to him 2 days before the op to today, yesterday, what a difference. He's got a full throat. It was very difficult. He's going to go through a tough period. But he said, I must send my absolute best to everyone in the den and all the TFNN family, and that's exactly what I'm going to do right now. Ed Young sends his absolute best, and on March the 6th, when he had his op, we gave white light to him. I told him, and he was just thrilled. So let's do this. I'm going to exit that trade. I don't want to trade on the air. So let's go to Ari in Arcadia. Hi, Ari. How are you?
Pretty good, Basil. Hey, you and I, we entered CHKM, and I'm still in.
Okay, so now you've got CHKM, and that is Chesapeake Midstream Partners LP. It's trading at 30.30. Ari's been in for a little while. Now, Ari, this is the interesting thing. The leg that it's in right now, I'm going to call E. Technically, it could recycle, but let's be as conservative as possible. So it's trading at 30.30, down 10 cents. In the 120-minute chart, it's made a peak D. Isn't that amazing how many times? Folks, if you're new to my work, you will see we stopped counting. I stopped counting. In 1 week, I stopped counting at 150. There were peak D is the objective in the Chapman wave. Can I go higher? Yes. But the number of times it just gets to peak D and then pulls back sharply is amazing. And Chesapeake went from 28 on the 6th of March to peak D, the fourth highest peak on the 12th of March. Is that the break? Oh, my goodness. Okay. I tell you what I'm going to do. Ari, hold on. We'll be right back. I like it. I want to discuss it in terms of the weekly and the monthly, and I think a lot of people would like to hear. We'll be back with Ari and Arcadia. Dow's down 14, S&P's up 1.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Down 16, S&P's up 1, and we're on right now with Ari and Arcadia. We're looking at CHKM, Chesapeake Midstream Partners. So, Ari, this is what I'm going to recommend. There is nothing technically wrong at this particular point, but just as a little safety precaution on the very short term, because the 120-minute chart is saying that if it was to close under on any intra bars, even if you're looking at the 10-minute chart, underneath 30 point, let's just make it, underneath 30, it's at 30.34, I would take a little bit off because you're going to be able to put it back on. But this is what's exciting about it. That weekly really suggests that it's going to try to take out both the 31.19 weekly to start leg C up, and the monthly will then start leg D. I like it very much. So only on a very cautious note do I say, maybe you want to take a little bit off, but so far it's acting really well. The 29, I don't have to tell you, but 29.84 is the 9-period exponential moving average support between 29.84 and 29.50. I think there's going to be a lot of support. If it does hang around there a little too long, then it might take time rather than price, and that could be frustrating. But so far, I think you're in a great position. So congratulations. And the most important thing is in the next, watch the MACD and the stochastic. Stochastic's at 91 and still rising. So that's a very good sign. So I like what I see, and there might be just a very short-term pullback. but you want to see that weekly start very quickly to get to the 30.65, 30.72 area, and that will say very strongly there's a U-cup formation forming that should take you back to the peak B of the weekly. Hope that helps you, Ari.
Thank you.
Thank you very much for calling. Let's go to John in Philly. Hi, John. How are you?
Basil, thanks for taking the call.
It's my pleasure, of course.
Hey, I'm always looking at the charts and plotting on the 200 exponential moving average.
Right.
So with that in mind, please pull up the HUI, the Gold Bugs Index, weekly. And I have a real specific question.
Fire away.
That particular chart that you're pulling up clearly shows a defined downtrend, no doubt about that. My question, is there any... gather my thoughts. In the Chapman wave, does the Chapman wave indicate further decline ahead, or alternatively, is there anything in the Chapman wave analysis that suggests a low at hand?
Okay, we're talking different time frames. Now, let me put it into the context of this. If you look at what I've got here, folks, if you're looking at Tiger TV, you will see the HUI, which is the ARCA Gold Bugs Index. And what it did is it made a whole series of lows. This is almost like a flat-based restart in the Chapman wave. And what happened round about it's trading at 475.55, down 73 cents right now. But even more important is that it is in the 491 area has been tremendous support. It went on to make a peak A, B, C, D. And then this is a particular chart pattern. In fact, I've made a note in my book. I'm going to make a note again. HUI, a series of little carrot tops. What happens is that they don't fulfill a wave, but they're already part of the previous waveform. So I call this peak E and then a peak F. That is peak E in the weekly chart on the 8th of April of last year, and then on the 9th of September of last year at 638.59, it makes a higher high, and that's it. Now, this is important. On the way down, it's making a series of lower lows and lower highs, but that 490 area was incredible support. All of a sudden, last week, you closed below it at 476.86, and you went to 474.82. That is really important in my work. And what it says is that there should be a bounce, and only a bounce that goes into the arch, which would say that it goes into the candle of last week with a low of 474 and a high of 509. The 9-period moving average is at 507. And it's touched the 200-period exponential moving average. But the weekly is still technically... the MACD and stochastic are still very poor, and it's the monthly chart that you've got to look at. It made a peak E in the monthly, and even more important and more significant, I would say, is that the MACD is still expanding. The histogram, those little vertical lines, that's telling us that the MACD is still very weak. Stochastic's trying to flatten out at 30%. My suspicion is that the stochastic will probably go to the 26% area at some point between now and April, middle of April. Here's the other thing, and this is also to me very important. You see the candle that's forming right now? Well, it's only Wednesday. We've still got Thursday and Friday to go.
Yes.
If we close... if the HUI closes underneath 465 on Friday afternoon at 4 o'clock, that'll be a negative sign. That'll be the first time that it's closed under the 200-period moving average. I'm squashing this. If we go back to April of 2009, that whole period, where it was trying to get back to moving above the 200-period moving average. So that makes it really significant. Why? Because it says that there's a chance that if it breaks down from here, then the next low bar with support is 430 to 429. So I'm looking at this, and I actually see nothing much in the way of gold. Now, as far as pop-up is concerned, in other words, just a real quick trade, then we have to go to the daily chart. And all I can say to you is that the dollar, you have to look at that relationship. The dollar right now still can't get it out of its own way. It's making today a very wide-legged doji candle, which says even if the dollar goes below 79.32, it's going to come back at some point in the next couple of days and test the body of this candle in the 79.60s. And even if it goes above, closes above 79.83, it should at some point come and test that candle. So the dollar is saying it can't get out of its own way. Gold should be soaring, and it's not. You know what I mean? I don't have to tell you these relationships. You know them very well. So I'm looking at this, and I'm saying it's all about the VIX, the volatility index. And that's what I've been talking about for about 6 months now. And that's going to be my benchmark, which tells me that if the dollar, excuse me, if the bonds, the dollar, and the volatility index are not going to use the next day or two to really spike to the upside, then probably gold is going to just meander. And all I can say is there could be a little bit of a pop-up. And for this, I'm going to go to the GLD, if you don't mind. The GLD, you see, even here in the GLD, this is really not a very good pattern. And the weekly chart says it went out above this two-year up channel. For those of you looking at the chart, I'm going to make it, if you've never seen my charts before, I'll try to make it clearer there. It went out of the up channel to 185.85, and now it's made two dreaded H's, those H patterns, and it looks very much like it's going to try to test the major support line of 152, let's call it 152s, 153 to 151. That red line, that major up channel support line that is not broken below for, wow, since it started back in February of 2010. This particular up channel is not closed below it. So I'm going to say to you that I can see a pop-up, and I know that you look at that. It's very important in your work, but nothing much more right now than a pop to the upside in the HUI, and that's because of this pattern where it closes below the major arch formation, and then it immediately tries to find support and go back and say, look, I haven't left you, I'm here, and then whoosh, comes back and retests the low that it made. And that low would be the low of this week, which is at 461.72. So I hope that helps you.
Basil, thanks. It does. And if by chance the HUI stages a multi-day rally, I hope you don't mind if I call you back in that event and tell me what you see on the Chapman Wave Daily.
Oh, okay, now the very first thing I'll say that the 491.64 high, the gap down high of the 14th of March, if it can close above there 2 out of 3 bars, that's 2 out of 3 consecutive days,
yes,
that would say very good. Now it's going to tackle the candle of the 13th, which has a high of 505. And where does that take us to? Just underneath the 507 level of the 9-period moving average of the weekly. So you can see there's a lot of resistance. But as a trade, that would be the trade that I would see.
Thanks for those parameters, Basil. Have a good day.
You too. Thank you very much for calling. That was John in Philly. Now let's go back to this. I had the questions on the high techs. So ABMD was a biomed. Very strong leg C, tremendous support now. It's at 23.16. Tremendous support in the low of the day, which is the 9-period exponential moving average at 22.29. If it breaks under that for more than 2 days before it makes leg D, I'd have to say, it could start to fail. But at this particular point, this is really good action. Now, let's go to the, then I had a question about Baidu. BIDU, G7, wanted to know, was it G7? Yep. Oh, no, Netflix is what, G7. So Baidu is trading at 141.44. It is in a couple, like a double cup formation, like a U, 2 U's next to one another. And that made a peak C back at 142.36, 142.49 on the 16th of February. It looks like, and today's high is 142.85. So that is leg D if I continue that move. But I'm going to say A, B. I'm calling it leg D/B because there's nothing technically weak just at this particular point. And if Baidu's MACD, the moving average convergence divergence, this thing right over there, if that crosses positive, that should push Baidu to about 143 to 144. We'll go one step at a time. But now the weekly chart has that same pattern And the MACD and stochastic are still very good, but it's really struggled to get higher. So all I can say is that the major support in Baidu is at 137 to 134, and the resistance to take out will be 147.68. As soon as it can do that, that's going to be very positive. But the monthly chart says it's really struggling after making a peak. This is more a digestive phase that I'm looking at. So now we're going to go to Baidu? Yes, Amazon. So who was Baidu for? Baidu was for Lorraine. Okay, Lorraine, I hope that helps you. There's another chart that Lorraine wants to look at, APKT. That is Acme Packet Inc. Now, this is a communications company. If you look at this chart on the right, there's my CD introducing the Chapman Wave methodology has a whole bunch of chart patterns. This is the one that I call the Eiffel Tower, and I spoke about this way before. I call this potential Eiffel Tower A. It looks like a capital A, reversal pattern holding. Reason why I bring it up is I was asked by, who was it, in the den, and I said, did I write that down? I must have written it down. Which one did I say looked like this same pattern? All right, well, let's do one thing at a time. So where would you find support? Major support would be it's at 28.15. That 200 period moving average at 20.68 in the monthly chart. I got to think that at some point it's going to retest that. But in the short term, the weekly chart tried to rally. This is the pattern that I call the dreaded H. Made a low on the week of the 6th of January at 25.20. APKT is what we're looking at. It's at 28.18, down 12 cents. Now, it retested that so far successfully last week. So we go to the daily chart and say, okay, and the technicals are kind of improving. So we go to the daily chart and we say, okay, a lousy monthly, that's what Dave White always does. So thank you. So what does the daily say? The daily says that it's trying to rally. If it can hold and not close under 27.11, that's just a point down from here, but instead it can go into that ugly candle, that candle of the 5th of March with a high of 30.22 and a low of 28.52. If it can close even one day above 29.38, that'll be the first real positive sign to say, you know what, after all the selling, I can have a bit of a bounce, and that bounce would take me to 30.27, which is the 9-period exponential moving average of the weekly chart. So that's that. And we've got, and Starboard wanted to know about AMD. These are folks in the den. And, here we go. So now this is very interesting. I've been following Advanced Micro Devices since, what was his name? Sandler or something like that was the CEO way back. Now, I used to have this absolutely no doubt. You can imagine if I've been following it for its lifetime, just about. No, it couldn't be the lifetime. 1985, 1974. I have to tell you, pretty close to his lifetime. It's had unbelievable ups and downs. This is a stock that can go from absolute single digits to big double digits. Advanced Micro Devices is trading at 8.07. Now, the monthly chart has finally started to improve, but it is more importantly the daily chart that has a particular pattern that I can define and tell you exactly. I'm calling this peak B, that move that went to on the 16th of March. Oh, is that the music? Is that almost the end of the show? I'm not sure if it's the end of the show or not. I don't remember the time. But there's a technique that I use that's called the falling axe. If I get back, I'll explain it when I get back. Basil Chapman sitting in for Dave White. I think I'll be back for a couple of minutes straight after this.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakouts gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Dave White. And, of course, this is the Power Trading Hour. It's just been my pleasure and honor to be sitting in Dave's seat for this particular show. And what's even more important is as we're going into the close, the Dow's down 24, and it's been weaker than the S&P all day, and that's kind of because a couple of Dow stocks are not acting very well. The S&P is down just 75 cents. Now, very importantly, as we're wrapping up, I can see Apple took a little bite out of Apple. It's making a potential peak F in the 120-minute chart, which says it could pull back. But even more important than that, it can pull back. It is how does it hold in this particular leg up, which I call leg C? How does it hold around about the 591 area, and then try to rally back again? We'll see if we can even do that. More importantly, the XLK, which is the S&P Select tech fund is in leg C in the Chapman wave, and it should go to a D. So it's going to be a very interesting period. We've got a couple of days to go, and then we have to, in my work, be making a new recovery high in the Dow for leg B. If it makes a B, then we can expect a leg C and D into next week. But I'm beginning to become a lot less positive about the market, just in terms of what I'm looking at technically, in that the next pullback I see could be quite a sharp pullback, but I don't see it coming just yet. I think we've got sometime next week where I will probably be getting some kind of at least a short-term top, and a lot of those big pushes to the upside that we've seen, and especially in the stocks that have gapped up on news, on earnings news, I would not be surprised if the target could be to see many of those gaps filled. Let's see. Oh, and one other thing that I want you to talk about, just in terms of my work, if we're looking at the Dow, and I know many people say it's only a Dow 30, but believe me, if you look at history, where the Dow goes, it pretty much signals that most of the market is going there. Maybe the comp index can go a little longer, but this is very important directionally wise. So the Dow at this particular point looks like it might close either on or just above the 9-period exponential moving average. If the Dow breaks and closes somewhere underneath 13,000 or 13,050 to 13,000, I mean close underneath there, I have to rethink about how the patterns will start to unfold, because that could be an unfold for one of those, what I call a single leg A up in the daily chart. It's very unusual for that to fail. That gives you very often the Eiffel Tower look straight up, straight down, looks like a capital A. I don't think that's going to happen. I think there are just enough stocks, residual stocks, to say that if the Dow holds somewhere above 13,100, the deeper this pullback in leg A, then the lower the highs start to be. If, in fact, we didn't even pull back this far, but we just went one leg down and we were at 13,315, that would be really positive. So what this is saying is, yeah, now it's working harder and harder. It's becoming much more selective. You've got to be a little bit careful. Certainly, we've taken on some new positions this morning, which are doing okay. But at the same time, you're looking at this very selectively. So, and the XLF is another key indicator. That XLF is at, right now, it's the select financial. Now, the select financials they just missed making a leg C, and I suspect that the XLF at 15.82 will still break above 15.97. The moment it gets to 15.98, that will start leg C. And they too have got really good technicals, so it's a very rotational select market at this point. My service is the opening call. You can check it out front page of TFNN. Get 2 weeks free if you want to sign up, if you like my chart patterns I show all the time. So thank you for being here, and I will be back for my show, the Tiger Technicians Hour, on Friday at 11 o'clock Eastern Time. Stay tuned for Tom O'Brien coming right up.